Yeah, good morning, everyone. So we had seen US market doing well, mainly driven by the corporate results. Morgan Stanley reported good set of numbers, and it was up by almost around 6%. Then Alcoa has aluminum giant has also reported better number. So quite a few good results are supporting US market. Asian markets are mixed, wherein China and Hong Kong continue to remain strong and moved up, but other market were a bit soft. Commodity also remained more of a flattish or marginal decline. Iron ore was down by around 1% and steel was down by around 2%. So overall, what we see that stable market, we had seen continuous selling around 25,000 by the FII. What we see that that may be getting a bit stretched now. Quite possible that the pressure on the selling, if toned down, then the market can start recovering. Uh, Overall seems more of a range bound trade again for today. I'll request technical team to take up from here.
Yeah, thank you, sir. Good morning, all of you. See, yesterday, last a few trading session, we saw that Nifty not sustaining above the 50 DMA, and yesterday failed to close above that important level. That's come around 25,040 level. Yesterday, Nifty closed below that level, and we expect next immediate support, majorly support place around 24,900. If Nifty fail this range and sustain the below this range, then we expect Nifty track towards 24,700 and then 24,500. That is long-term moving averages. Bank Nifty nearly close near the 50 DMA, but trading near this range only. Majorly support place around 51,800, and below that 51,500, 51,270 the next majorly support place in Bank Nifty. Upside 52,370 is a major resistance for Bank Nifty. So both index trading near the 50 or below this range. So we closely watch if Nifty weekly close today and next Monday, Friday, to close below this range, then we expect further sell off to be continue. Otherwise, Nifty trading this range only 50 DMA and above that 100 to 200 point plus in Nifty. Fin Nifty also trading near support zone, and that first immediate support place around 23 840, and then below 23 750. Upside 23 970 is the next major resistance for Fin Nifty. So we expect for first half an hour if Nifty again sustain the 50 DM, and then we expect further rally. If Nifty break the intraday support, then we expect some pressure in increase in downside. Stock specific, we already recommended Tata Tech. We expect this momentum to be continue in Tata Tech in positive side. We expect upside 1100 first target in Tata Tech. Majorly support place around 1050, 1040 to in upside target is first 1100, 1120. Navin Flora also looks positive at current level right now, trading the long term on the averages, and we expect the positive momentum towards 3520, 3540. First intraday support place around 3400, and below that 3340, the major support for Navin Fluoro. So these positive side, these two stock looks positive, and in negative side, we yesterday closely watched that Concor ONGC also break important level in below side. We expect some pressure in ONGC Concor and Aarti Industry also looks at current level. That's it for technical. Derivative I can get.
Yeah, thank you. Good morning, everyone. So on the derivatives front, as you witnessed that from last 2 days of trading session, Nifty is showing some liquidation, but still maintaining the range of 25,200 to 24,700 mark. At 25,000 mark, we have seen that in yesterday's session, almost around 5 million positions of call writer got added on. So at 25,000 mark on the monthly basis, we are seeing that 16 million position of call writer is there and 18 million position of a put writer is holding strongly. So both are on the same point of scenario. So till that time, major liquidation is not happening at 25,000 mark. Till that point of time, we expect the market to remain in between 25,000 level. Till the time Nifty is maintaining the support of 24,700 level, till that point of time, we expect the market trend to be positive to range bound. Once if 24,700 gets broken out, then we expect the fresh short rally in the market towards the 24,300 to 24,200 mark. Till that point of time, we expect index to be in the range bound, but the major stocks we are seeing that the momentum is still positive. From PCROI front also, we are seeing that PCR yesterday closed at 0.74 level. So there is a more 5 to 7 points drop in the PCR left for the oversold zone to be converted. So once if PCR comes in near 0.68 to 0.66 level, at that point of time, we might again witness some pullback in the market towards the 25,050 to 25,100 level. So for the intraday level, the support for the Nifty as per the OI portion will mark at the 24,800 level. Towards that, we expect the pullback to be seen in the market in the second half. While on the stock specific and sector specific front, HDFC, AMC, Divi's 11, Siemens looks positive. While on the negative front, ICICI, Lombard, Power Grid, and Zydus Life looks negative. So that's it from the front. Thank you.
Good morning. On the result front, yesterday Himadri Specialty Chemicals posted the results, and results has improved for the quarter. During the quarter, revenue grew by 13% and volume increased by 26%. On the operating front, margins reported at 18.3%. This is at the highest level so far. In the press release, the management has provided update on their ongoing capex plans of LFP cathode active material and the new specialty carbon black line, which are on track as scheduled, and their balance sheet is also is strong with a positive cash balance of rupees 255 crore, which gives comfort for their planned capex. Currently, the stock is trading at a PE of 67 times to TTM EPS, and we see the robust growth that they are having and the healthy return ratios. One can accumulate or add on dips with the long-term positive outlook. Yesterday, Rallis India had hosted the con call. In terms of the segment-wise performance, they had discussed on the crop care segment, which delivered 17% volume growth, and in terms of revenue, it had grown by 7%. It was largely driven by the domestic business, while the export business continued to remain under pressure. Company's export business, though it was under pressure, it was resilient. It was focused on maximizing its volume and improving the capacity utilization at its plant. It worked on debottlenecking to serve the increasing market demand. Additionally, it is also working on further expansion of new efficient technology, which is expected to be commercialized by FY25 end. In terms of crop protection business, it has launched various products like metribuzin, hexaconazole, and pendimethalin, which are doing good. And it has also launched Clasto and Mark Plus. In the crop nutrition business, it is expected to focus on the innovation and expansion in the segment. It aims to introduce the new products, and it has launched 2 new products in the crop nutrition. In the seeds business, revenue grew by 48% on a YY basis, and the growth was largely driven by the strong demand from for North Cotton hybrids, and also the better Kharif liquidation and very low returns in the segment. The management aims to introduce new seed varieties and expand their market reach. It aims currently the market share in the seed business is 4%, where it aims to grow significantly over the next 1 to 2 years. The stock is currently trading at 32 times to FY26 EPS, and we are long-term positive on this stock. Thank you.
Hello everyone. Ultralex Cement has recently commissioned an additional grinding capacity of 1.2 million tons per annum in Tamil Nadu. This expansion is part of the company's strategy to enhance production capability and meet the growing demand for cement in the region. The new capability is expected to strengthen Ultralex's position in the market and contribute towards overall growth objectives. The move aligns with the company's commitment to increase its operational efficiency and sustainability in response to market needs. Thank you.
Good morning. On the result front, CRISIL posted result yesterday. Result has improved. Revenue from operations grew by 1.8% quarter on quarter and 10.3% YOY. If you look at the segment wise revenue, then rating revenue, which is 30% mix of total, grew by 30% YOY and 13% quarter on quarter. Research revenue, which is 70% mix of total, grew by 4% YOY but decreased 2% quarter on quarter. EBITDA grew by 8.3% quarter on quarter and 16.8% YOY. EBITDA margin came at 27.6% versus quarter on quarter 25.9% and YOY 26%. Company's overall PAT is increased. Bajaj Auto result is broadly in line with expectations. Revenue from operations grew by 10.1% quarter on quarter and 21.8% YOY. EBITDA grew by 9.8% quarter on quarter and 24.3% YOY. EBITDA margin is in line with expectations. PAT is marginally below than expectations. Company gave some guidance like the company expects continued top line growth driven by expansion in its electric vehicle portfolio, CNG vehicles, and strong domestic and export demand. Export volumes are expected to improve by over 10% in quarter 3 FY25, supported by better performance in Latin America and gradual recovery in African markets. In EV segment, the Chetak EV scooter has gained significant traction, nearly doubling its market share over the year. The company plans to launch a new model in the Chetak range starting from November 2024. Company also plans to expand the Chetak distribution network to 4,000 stores by January 2025. In three-wheelers, company three-wheeler business achieved record volume of 140,000 units, of which 16,000 were EVs. And the domestic motorcycle market saw strong performance, particularly in the 125cc and above segment. Bajaj Auto's market share in the 125cc segment is now 25%. In Freedom 125 CNG model has seen positive market acceptance with growing retail numbers and is expected to hit 18,000 units by October 2024. Bajaj's new plant in Brazil is stabilizing production with plans to expand capacity to 35,000 units by FY26. So the overall outlook for Bajaj Auto is positive. Thank you.
Yeah, apart from this, L&T Technology has reported numbers. The numbers were in line. CC revenue growth came in at 3.4% versus expectation of 3.3%. EBIT margin saw some pressure, wherein it has come at 15.1% versus expectation of 16.5%. And last quarter 15.6%. The main reason for that same is that the company continued to remain in investment mode, wherein they are looking at improving the field force, improving the employee metrics, and also looking to they had done some spending for the new contracts which are in upmove, which are under implementation and the start of implementation, where the initial expenses are higher. Company has indicated that the earlier guidance of 8 to 10% revenue growth is sustainable, and they will be able to achieve, though the required rate for the same is comparatively high at CQGR of minimum 4.5, and to achieve 10% growth, they need to grow at 7% CQGR, which seems comparatively bit higher, but management has reiterated that they are quite confident of achieving 8 to 10% revenue growth guidance. Also on the EBITDA, company had said that they will be achieving 16% EBITDA for the current year. That also require bit higher margins in the coming quarters, coming 2 quarters. And there again, the management has indicated that they are quite confident of achieving the 16% EBIT margin in the coming higher than 16% EBIT margin in the coming period. So the overall EBIT margin is around 16%. So the management commentary was comparatively strong and reiterating its earlier growth guidance. So outlook in the near term is neutral, but outlook from a long-term perspective with the revival of IT sector is positive. Similarly, Mphasis has come up with the numbers yesterday evening. Numbers were marginally ahead of expectations. The CC revenue growth came in at 2.4% versus expectation of 1.8%. And TCV booking was more of a stable or marginally lower as compared to last quarter or last year. But that volatility will consistently be there. Apart from that, EBIT margin has come in at EBIT has come and EBIT has increased by 6% Q on Q and 7.5% year on year. Overall, here again, the valuations are fairly priced at around 28 times FY26 earnings. So outlook is neutral here. That's all from us. And I'll request commodity team to take up from here.
Yes, sir. Thank you very much. Good morning, everyone. So in today's session, one can buy gold around 76,500 with a stop loss of 76,200. On upside, we eyeing for 76,800 to 77 level, 77,000 on the upside, whereby profit taking is expected. And silver, one can initiate a buy around 91 400 to 300 levels and maintain a stop loss of 90,700. On upside again, the resistance area is at 92 200. So one can book profits around 92,000, 92 200. If prices are sustaining above 90 to 200, then we might see further rally. Else, a profit taking rally could be expected. And in crude oil, there could be a pullback. Prices are consolidating in 5,900, 5880 to 59,880 to 6,000. So there could be a pullback till 6,000, and one should strictly buy with a stop loss of 5870. And then natural gas prices have breached the support area at 202 levels. So there could be some correction till 195, 195 to 193, whereby some pullback can be expected. However, on upside, 208 to 110 is the resistance zone for now. And in metals also, copper might retest the support area at 815 on downside, and then witness some pullback. However, prices are resisting at 824, 826 levels. So fresh buying only above 826. And in zinc, one can initiate a buy around 279, 278, 279.50, and strictly maintain a stop loss of 277.50. On upside again, 282, 284 is the resistance area whereby one can again sell around 284 with a stop loss of 286. So that's it from us. Thank you very much.